Welcome back. In this video, I'm going to highlight some of my thoughts regarding PayPal and Google following their recent earnings reports, and I'll tell you whether or not I've sold any of my shares in either company. Let's start with PayPal. This is a stock that I've covered on this channel, and as I've mentioned before, I am a shareholder. Since their earnings report, the stock is down over 22% due to a combination of factors. Among them, the company missed estimates on both earnings and revenue. The company saw branded checkout growth decelerate to just 1% on a currency neutral basis in quarter four, down from 5% in quarter three, and stoking the flames of fears that PayPal is being disrupted by competitors. The company issued disappointing guidance. As you can see here, for the full year 2026, we expect transaction margin dollars slight decline, transaction margin dollars ex interest on customer balances roughly flat, non-GAAP EPS growth low single digit decline to slightly positive, GAAP EPS growth mid-single digit decline. And finally, the company also announced that CEO Alex Chriss was no longer with the company and that Enrique Lores, who has most recently been the CEO of HP, would become the CEO of PayPal on March 1st. So this begs the question, given all this negativity, have I sold any of my shares or options? And the answer is no. I'm seeing a lot of people finally capitulate on this name, but for me, I do not yet see a reason to. I've seen others say the thesis has changed, and if someone's thesis has changed and cannot be replaced by a new thesis that makes sense, I mean, I understand someone might decide to take their losses and be done with the stock. But for me, my thesis hasn't really changed much. My thesis has been that revenue was still growing, the balance sheet was strong, the free cash flow yield was high, and the company is buying back massive amounts of stock. None of those things are any less true today than they were before this earnings report, despite the pressures and threats of disruption and some uncertainty about the direction the company will take under the new CEO. In fact, with the stock now trading at about 7.5 times trailing 12-month earnings, the number of shares being repurchased will only accelerate, with the company guiding to still repurchase $6 billion of shares in fiscal year 2026. And for those saying that they may not honor this under the new CEO, perhaps that could happen. But Enrique Lores has been on the PayPal board for several years, so he's not an outsider. At the current market cap, $6 billion of share repurchases would represent over 15% of the shares outstanding in fiscal year 2026 alone. With this in mind, I'd like to take a minute here to share some perspective that Warren Buffett had in his 2011 shareholder letter regarding companies that are repurchasing large amounts of stock. In that letter, Buffett said, "This discussion of repurchases offers me the chance to address the irrational reaction of many investors to changes in stock prices. When Berkshire buys stock in a company that is repurchasing shares, we hope for two events. First, we have the normal hope that earnings of the business will increase at a good clip for a long time to come. And second, we also hope that the stock underperforms in the market for a long time as well. A corollary to the second point, talking our book about a stock we own, were that to be effective, would actually be harmful to Berkshire, not helpful as commentators customarily assume." He's, I think, saying here, if we talked about the stock and we talk our book about the stock more and people go out and buy it, it's going to make the stock more expensive, which makes the repurchases of shares less effective, less impactful. He goes on in this highlighted portion to use IBM as an example. I won't read all of it to you. You can check out the 2011 shareholder letter if you want to. This last line I highlighted here said, "I won't keep you in suspense. We should wish for IBM's stock price to languish throughout the 5 years." So he's basically saying for companies to repurchase a lot of stock, it's to our benefit as long-term shareholders for the stock to be cheap. Sounds familiar? Yes, PayPal has some challenges, but aside from revenue still growing, the balance sheet being healthy, the buyback yield being high, there's still the potential for new growth drivers as well. If they do reaccelerate branded checkout, perhaps with the help of agentic commerce, that would be one growth driver. The ads business still has a lot of potential as PayPal has a lot of data that can be used for targeted advertisements. PayPal World still has potential related to cross-border payments. Venmo is still growing rapidly, having achieved about 20% revenue growth in 2025, and buy now, pay later remains strong. The company's enterprise payment solution, formerly known as Braintree, is seeing signs of reacceleration, and ultimately the company still has 439 million active accounts and over 225 million active monthly accounts, both of which are still growing, albeit slowly. I don't believe PayPal's merchants will all leave them. I don't believe their active accounts are all going to stop using PayPal and Venmo overnight. I think the fact that so many companies are willing to partner with PayPal is actually evidence that the business may be stickier than what they're getting credit for. At this time, I don't plan on selling my PayPal shares or leaps, which don't expire until January of 2028. I am not buying more yet either because I want to see the chart show some structure and see what the new CEO has to say about the direction of the company. I also believe the overall market is starting to show some signs of weakness, and I want to save capital in case there is an opportunity to buy higher quality names at discounted prices, but I cannot justify selling PayPal at these levels. In fact, one of my biggest concerns is that PayPal will be bought out at these levels. My hope is that they'll not be taken over, that PayPal Bank will become a reality, and that the company will begin to innovate again. I'm not afraid to say it when I believe that I'm wrong about a company. But with my thesis still very much intact, I'm not yet ready to say that about PayPal. If you missed my prior videos about PayPal and PayPal Bank, be sure to check those out. Now on to Google. Google crushed on their earnings report, beating EPS estimates by 7% and revenue estimates by 2%. EPS was up 31% year over year. I'm not surprised at all that Google registered yet another strong quarter. I made purchases of the stock in late 2024 and during 2025. And as you might imagine, I've done quite well with it, despite the fact that I see Alphabet as a long-term winner. I will say I did take some profits going into this earnings report. And you may ask why. Why would I do this if I think it's a long-term winner? Well, for one, the stock had grown to be quite overweight in my portfolio. So I did not sell all my shares, but I did sell enough so that the stock now represents what I think is a more proper weighting for the long term. Secondly, the stock had become much more richly, or at least fairly valued heading into this earnings report. Not richly valued enough for me to sell all my shares, but richly valued enough for me to take some profits and have it be a more reasonable percentage of my portfolio. Third, there were some things technically that told me it may be time to take some profits. The stock has run up a lot. It was starting to remind me of Netflix when it was getting to those highs back in 2025. Also, if you look, this is a daily chart. It had three highs, you could even say four, but I was really looking at these three going into the earnings report where the momentum was seemingly slowing down. And it also was accompanied by bearish divergence on the RSI here, as you can see from this yellow line. That means your RSI is trending down while price is trending up. This is bearish divergence. Should Google sell off here, I don't think a 20 to 30% correction is out of the realm of possibility. So I decided to take some profits and keep some shares for my long-term portfolio. One stock I'm hoping to add to the portfolio at some point in time is Microsoft. So make sure you subscribe to the channel and click the bell to get notified about when I release a video about that stock. In that video, I'm also planning on including a valuation for the stock to let you know what I'm looking to pay for it. And also just subscribe to get all future updates. Thanks so much for watching. If you found this video helpful or informative at all, please click the like button, and also follow me on X at Stock Sale Flyer so you can get more of my regular updates on what I'm doing in the market and more of my regular thoughts about the market. Thanks so much. Take care. Hope to see you in the next one. Bye.